Howdy friends, Corey Moser with Nationwide Loans. Yeah, I wanted to put together a quick little series, just a few videos to help first-time home buyers understand some qualifications and what the process takes to get qualified to purchase a home. I get those questions a lot. There are a lot of you that are first-time home buyers and have a lot of questions. If this is your first time to this channel, please subscribe so you can be up to date with other informational videos that we will provide. But today we'll go over down payment requirements. It's not quite as much as you would think. There's a myth out there that you need at least 20% down to purchase a home, and that's just not true. In fact, most loan programs available have some options as low as 3% down or even 3.5% down. Those are the typical down payment requirements for a first-time home buyer. 3% down is a program with conventional financing, which does have some income restrictions. So if you exceed 80% of the area median income, you wouldn't qualify for that 3% down program. But FHA is a great option that only requires 3.5% down and does not have income restrictions. Although FHA does have loan limit restrictions based on the county that you live in. So you can always do a search. What are the FHA loan limits for Salt Lake County, for example? And it will give you an idea of what the maximum loan amount can be for that type of loan. There are other programs out there with no down payment requirements. One would be USDA. That's usually a rural housing loan. So if you're looking outside of a suburban area, if you're kind of looking in a rural location, generally those locations will qualify for USDA, but USDA loans do also have income restrictions that can't exceed 115% of the area median income where you're purchasing a home. And they also look at family size based on the number of people that live in the home. So if you have 1 to 4 people living in the home, you'll be at the lower tier. If it's 5 to 8 people, it would allow for you to purchase at a higher purchase price, or a higher income level, I should say. So those are some programs that are available. There are down payment assistance programs and some grants available. Some programs that come to mind are Utah Housing. They usually come in with your down payment, but they attach a lien to the property. It's basically a silent second mortgage that doesn't require you to make payments. Ideally, however, the best way to get into a home is to save up for that 3 to 3.5% down. FHA loans have extremely low rates. You can usually get a rate about 0.5% lower than most conventional loans. And the nice thing about FHA and this 3% first-time home buyer program for a conventional loan is that your down payment can be gifted. It doesn't have to be money that you've saved up. We just have to provide some documentation to show that you've actually been gifted the funds and are not obligated to repay them back. So a lot of good options for purchasing a home. For example, $500,000 home, 3% down would be about $15,000 that you'd need to save. In the next video segment, next Thursday, I'll go over closing costs. So down payment was today, and then people are surprised to find out, oh, there are closing costs on top of the down payment. I'll give you some scenarios where you can avoid paying those closing costs. So stay tuned, click subscribe, and we'll see you again next week. Take care.